What is going on, crypto peeps? Welcome to another edition of the Traveling Crypto. Let us get right into the market update. Bitcoin is currently trading at around $7,600. Again, an unremarkable price. We'll get into that a little bit later, but this range really doesn't tell us anything about the market, especially with the epically low volume that we are currently seeing. Over the last 24 hours, there hasn't been really any significant rally in alts. However, if we go back a little further than that, you'll see that Bitcoin Cash continues to do well. EOS continues to do well. VeChain, Binance Coin, Zilliqa, Ontology. A lot of these coins, especially ones that have updates coming up either to their test nets or their main nets, are doing really well. We did send out a few trade alerts for these coins. If you want to get access to the trade alerts, subscribe to the Patreon that is in the description. Let's switch gears to our BTC technical analysis. So the most important thing, and I've remarked this a few times already, is the cross between the 100 and the 200-day EMA. We've heard about the death cross between the 50 and the 200. We've been there. The 50 crossed below the 200 was sometime back in February. We haven't been able to get over that hump. However, the 100-day falling below the 200-day is something that hasn't happened since 2014. And if I zoom in a little bit, you'll be able to see it a little more clearly here. The 100 is the green in this chart, and the 200 is this teal blue line here. And you'll see that we matter-of-factly fell below the 200-day moving average. Again, this is something that hasn't happened since 2014. And when it did happen, it lasted almost a year and a half. So that is not a good sign. And a lot of this has to do with the lack of volume that we see here. We talked about this orange line on the volume before. This is the 20-period moving average on the volume. Again, this comes standard with the volume indicator on TradingView, and you could see how far below this line we've currently been trading. There hasn't been a lot of volume on Bitcoin. Without volume, prices, higher prices have a lesser tendency of sticking, and you don't really see movements or reversals that are confirmed by the market. You might be able to see a price rally without significant volume, but the effectiveness of that rally or the stickiness of that rally becomes tenuous if you don't have the volume to back it. So that is not good news. Let's see how long we lasted in 2000. Let's see how long this death cross lasts. In 2014, we had the Mt. Gox debacle. That's something that we currently don't have here. So there isn't a specific event that's taking down the market essentially. So let's see if we recover quickly from this. Again, we do need volume coming in. We've heard a lot about institutional efforts or efforts to bring in institutional money into crypto, but it's June and that hasn't happened. We expected it to happen a bit sooner or right around this time in 2018, but we're still struggling to get above 350 billion on the overall market cap. Not good in terms of volume. Long-term outlook, I'm not so bearish, but in terms of the current assessment of the market in its current state, not very good. We do see a bullish hidden divergence between the price and the RSI. Again, without volume, these divergences are also less relevant, but it is there, and a hidden bullish divergence tells you that the current trend is going to maintain. And if we measure from the point of the beginning of this hidden bullish divergence, we are technically on an uptrend. Overall we're on a downtrend depending on from where you measure. But if we're measuring from the beginning of this divergence that we see between the price and the RSI, we are technically on an uptrend. So that is a sign that trend will continue. However, again, with the lack of volume, I don't really have much trust in bullish or bearish indicators, because we see the bears are exhausted as well. We don't see a lot of bearish volume coming in or in the form of sell-offs or sell-off volume. So we continue to trade for almost 2 weeks in this limbo channel between 7,100 and 7,700, which we're still between the 0.236 and 0.382 fib levels. Moving on to the weekly chart, again, we drew this reverse head and shoulders weeks ago, and it looks like that's what's panning out. The price could dip further, and while maintaining this possible pattern. So we'll see. But if you look at the weekly chart, what this gives you is even a better view of what's going on with the volume. So if you look at the volume since February, we've been on this downward slope, and it just looks abysmal compared to what we've had previously, even before the famous December 2017 rally. We still had periods of healthy volume touching or crossing this 20-period moving average, but I mean, ever since February, it's been crazy low, that is. All right, let us move to Ethereum. So looking at Ethereum, currently, Ethereum, the 50-day is still below the 100-day, and that fell below all the way back in, this was March, and it really has struggled to get above it. However, we don't see that double death cross where the 100-day is nearing the 200-day. Matter of fact, the 100-day is above the 50-day currently. So we're not as much in a danger zone in Ethereum as we are in Bitcoin. And I don't want to say danger zone. That's not really a relevant term, but I would say a period of stagnation, really. I don't want to say danger zone, because I'm not one of these analysts that prophesizes, Bitcoin is going to decline to 1,000 by, July 31st. No. We just take what the market gives us. So looking at Ethereum, you do see a hidden bullish divergence as well. The momentum and the price kind of move similar, of a lot of these top coins move similar to Bitcoin. So you will see this hidden bullish divergence on a lot of these top alts, almost for the same period that we see on Bitcoin and Ethereum in this case. And again, that is a confirmation, or I guess a signal, not a confirmation, that we will continue on an uptrend, however slight that uptrend seems to be. We do struggle from the lack of volume, not as bad as Bitcoin historically, but it's still, it's still present. Looking at this chart, there really isn't a confirmation of a move in either direction. We do see bullish indicators, so you'll see that the MACD crossing over, the hidden bullish divergence, the stochastics trending upwards, and then you also see this bull flag continue to form on Ethereum's price, which is also a bullish indicator, right? What you expect with a bull flag, assuming that we do have the volume to back it up, what you expect is coming out of the bull flag at some point to break out into this direction again, right? So it goes, you see the rally, which is the pole of the bull flag, and then the flag sloping downwards, and then another rally upwards. So it's just a matter of if we can get to that rally breaking out from current prices, or will we have to see, a further decline first and then the rally upwards. It's just a matter of, it really is a matter of volume, in my opinion. So we'll see what happens with the price. I mean, with current volume levels, you'll continue to trade sideways on most of these top coins until you see a breakout in either direction. But this is a bullish pattern. Looking at XRP, you see we are flagging at the moment on XRP. We did see a nice little rally stemming from the end of May. XRP continues to be one of those coins that sees a lot of good news, but it doesn't really translate to the price. There is a reason for that, and it's because a lot of the good news does actually tie back to Ripple, the company, and Xcurrent, and not really XRP itself. I did a whole video on this. I'll link it somewhere here. One thing you do see with XRP, though, is that the moving averages are where they're supposed to be. So the 50 is above the 100, is above the 200, which is a good sign. We don't see really any death crosses that emanate from these periods of low volume. We didn't see the price drop significantly to where these moving averages are crossing each other. So that's a good sign for XRP. Again, we are flagging at the moment, which could be a bullish indicator depending on how the price moves from here. It looks like we're trading sideways really since June 3rd. But if you go back all the way to May 29th, we are definitely in an uptrend. You see it here. In my estimation, if we continue to get some buy volume like we did here from the end of May up until now, that we will continue to see, XRP break out of this flag on upwards. In my opinion, I think XRP is still a great long-term hold. Looking at Bitcoin Cash is another one of these coins I did send out a trade alert for, and we did see some nice gains so far on Bitcoin Cash, but it's been slower moving than we anticipated. But again, it's back to the volume and to what the market is doing. On Bitcoin Cash, you do see the 50-day moving average continue to fall below the 100-day moving average. But, unlike Bitcoin, we don't see the 100 and the 200 crossing. Again, we are flagging almost in the same way that XRP is flagging, and we are currently trading sideways since June 3rd. And there really isn't anything remarkable on Bitcoin Cash in the short term. I think it's a great long-term hold, and I do continue to carry it in my portfolio. One coin that I'm really bullish on is WaltonChain. If you look at WaltonChain, if you look at from the fundamental perspective, they do have a busy roadmap ahead with the RFID tags launching, the smart contracts platform launching, etc. They do have a mainnet launch that happened, I think, sometime back in March. But with the mainnet, you still need to release features onto the mainnet in order for you to have a working product. So they do have a busy schedule ahead of them. Currently, you see this large bull flag occurring on the WaltonChain one-day chart. Again, it's a matter of, can we break out from current price levels, or do we need to decline a bit further in order to break out then again? But I do think we will see a breakout. WaltonChain is one that I did send out a trade alert for. However, I do, from at least what I do personally, is I would set a pretty aggressive stop limit here, because if we do break out immediately, that's great, and you have already put some of this in your portfolio. But if we decline further, you do not want to get stuck holding a bag that's going to decline 20%, even if we do see an increase. I mean, you want to be able to maneuver with some capital. And in order to do that, at least the way that I do it is I'll set a pretty aggressive stop limit. That way, if it does decline, I can get out and have some BTC to either put into other holdings, diversify into other holdings, or buy WaltonChain back at a lower price. So if we do continue to decline, one possible level that we might decline to before seeing a rally upwards is this one on the fib level. And if you measure that from current price levels just to that one level, that's about 22 or 23% loss, right? So yeah, it's fine if you're not a swing trader, or if you don't feel like you're the type of trader that likes to get in and out of positions. It's fine to just hold if you believe that something is going to rally eventually. But I like to have more flexibility with my capital. And so if I can get out at minus 5% and then, either buy back again at a lower price, or have some capital in order to put into other coins that might be rallying at the moment, that's what I like to do. So that is why I would set a pretty aggressive stop limit on a situation like this, where we could see a breakout from current price levels, or we could decline to previous support levels before we see a breakout. Either way, I think from a fundamental perspective, as well as from the technical perspective, this large bull flag forming, and then if you look at a more recent period, you'll see a pattern within a pattern. You'll see sort of an ascending triangle forming as well. But it all depends on where you measure from, right? Like you can have patterns within patterns when you're doing technical analysis. So if you measure from here, you might have a different pattern than if you measure from here. It's just a matter of seeing what is the most relevant at the current time. And again, with Walton, like with other coins, you do see a hidden bullish divergence between the price, the RSI, and the stochastic, where the price made a higher low, the stochastic made a lower low, and the RSI made a lower low. So that is a hidden bullish divergence, which again means that the current trend from where you measured that divergence is likely to continue. And that is an uptrend, again, however slight that is. But that is a confirmation that the uptrend will continue. We do need some more buy volume, although if you zoom in a little bit on Walton, you will see that we've had these healthy tall green bars well above the 20-period moving average, and not many sell-offs thereafter. So I would say that the volume on Walton is it's not optimal, but it's much better than some of these other coins that we've seen. So I'm bullish on Walton from a fundamental and a technical perspective going forward. And there wasn't much going on today in terms of news, in terms of crypto news so far. But there are a couple of articles that I found somewhat interesting. This one from Cointelegraph: stock analytics firm lowers BTC year-end price prediction by nearly 17%. And the reason I found this interesting is because I always am harping on volume. And the reason that they lowered their expectation or their forecast from 15,000 to 12,500 in terms of a year-end price is because of volume. So you'll see here, lowering our year-end Bitcoin price target to 12,500 due to weaker transaction volume. And if you read more into the article, you'll see that that is the main reason why they have lowered their price prediction. And we'll round off today's segment by going into our last article. Russian President Vladimir Putin publicly addresses crypto, says practically nothing. So it's funny because it seems like he's poo-pooing crypto, but if you read into this a little bit more, you'll see that he does have a little bit of a better understanding about crypto, more than at least what I've heard from some other world leaders. But he was saying here that Russia cannot have its own cryptocurrency, as cryptocurrency by definition cannot be owned by a centralized state since it goes beyond borders. So I like that he acknowledged at least that governing bodies and governments themselves cannot, if it's a true cryptocurrency, cannot really extend their long arm of the law in trying to mandate or regulate or at least control cryptocurrency, because, essentially the people will just take it underground, right? The government itself cannot really control cryptocurrency, and then having a centralized government currency just really means that, all you're doing is engaging in digital money, and it's not a true cryptocurrency. It's more centralized, right? If a government of a sovereign country releases a cryptocurrency, it's not going to be a decentralized peer-to-peer cryptocurrency in the spirit of Bitcoin, for instance. It will definitely be a centralized cryptocurrency, which is essentially just creating a new currency, a new digital currency out of thin air that you have full control over. So at least it seems, based on those few words that he kind of understands that. All right, guys, that is it for this video. Go ahead and subscribe to the channel, hit that notification bell, leave a comment, start a discussion in the comment section, join the Discord, it's 100% free. Subscribe to the Patreon for the weekly picks and the trade alerts. Stay safe out there. Peace.